Okay, so we've spoken a lot about the economy, but now let's talk about how to make money, right?
Yes.
You have a very interesting report called the Nifty to Sensex in the next 10 years.
Yeah.
So you're saying that the Nifty will go from 26,000 to 86,000 in the next 10 years and can perhaps do better than that.
Yeah. So it can go. It will, I don't know, but it can. Probability is there that Nifty, which is today, let's say 26,000, can be today Sensex, which is 85,000 thereabouts. Can be. So putting that in context. So this was just a presentation which I was just thinking on some data line just to think that, okay, how can the next 10 years look? It's all Excel sheet work, right? But then I try to build in some chronology in this, that if this happens, why will it happen? And if this can happen, then has it happened in the past, right? So keeping all of these things in mind, me and my team, we just sat and started working on numbers. So now let me first explain to you in a simple way. From the time Nifty got incepted, somewhere in 95, 96, so about 35 years, Nifty total return has been 14%. And X of dividend return has been about 12%. But let's take the total return from calculation perspective. So if I just kind of say that, okay, whatever has happened in the last 30 years, if you just take the same compounding for the next 10 years, then what happens? So if you compound 14% from today's level, let's say 25,000, 14% means roughly 5.5, 6 years you double, right? So in 10 years, just the simple 14% compounding mathematic will take you to about 82, 83,000 by 2035. Just 14%, what has happened in 30 years, if that repeats in the next 10 years, then you're looking at 82,000, which means that today's Sensex is 82,000 and Nifty will be 82, 83, 85, plus minus, whatever it happens. That's a simple compounding of 14%.
But that's the assumption that things will repeat.
It's an assumption. Now you say no, it will grow at 12%. So maybe it will be 77,000. 76,000. You will say, no, it will grow at 9% only. Then maybe it will be 68,000. But certainly it's going to be higher than where we are today. Matlab, you will make returns, right? Now it's up to you. What you want to, you're conservative, you want to take 12%, you want to take 10%, I leave that to you, right? I've taken 14%, whatever. I'm just taking data from the past. And, they say that history does not repeat, but history rhymes. So I'm just saying if it rhymes, probably this is the number. But just take a broad understanding. Now, so what we thought was that what has happened in the past, let's look into that. What happened in the last 10 years and then what happened into the previous 10 years. उसके पहले देख नहीं सकते because 95 में born हुआ था, तो you don't have full data there. So what we saw was, now note these numbers, okay? First we saw 2004 to 2014. 2004, Nifty was it was 1700, right? And that time Sensex was about 5,500, 6,000. First April 2024. I'm taking financial year. 2004 to 2014, 1700 Nifty ended at 6,500. And like I said, the starting point of Sensex was 5,600. So very close to it. Actually did better than Sensex, right? 1,000 points more than the Sensex. So it has happened between 2004 and 2014. Then we took the next 10 years, 2014 to 2,700. Now the 24, sorry. So the opening level is now 6,500 for Nifty. At that point of time, the opening value of Sensex is 22,300 thereabouts. 2024 just passed by last year. What was Nifty? 23,000 something. What was Sensex at the start? Actually, there's a difference of 200 points. Okay, now let's go back in 2004 to 2014 and let's look at some numbers. Basic numbers. I will not go into deep numbers. I can share with you later on. So what we saw, so this was a compounding of 14%. In that 10-year period, 2004 to 2014, Nifty compounded at 14%. Sensex had compounded at 15%, plus minus 1%. So like we have been discussing that there is a close correlation between earnings growth and price growth. So we saw the 10-year EPS growth for the Nifty 50 companies. The starting EPS was 130 rupees for the top 50 companies. 130 ka EPS tha. The closing EPS was 401, right? So that was compounding at about 13%. The EPS compounding was 13%, led to the price compounding of 14%. Growth is equal to return. Keep that in mind. Now, why were the companies doing well? Like again, we have been discussing through the interview that there is a close correlation. Economy has to do well, then the corporate India will do well, and then the market price will go up. So we went into the GDP numbers. So our GDP was $440 billion, which I told you in 2004. It ended at $1.89 trillion at the end of 2014.
14.
Okay, so $440 billion GDP going up to 1.89. This was a compounding of 16% nominal in dollar terms. But if you refresh your memory, in that patch 2004 to 14, the real GDP was about 8%, but inflation used to be very high. 10% का inflation होता था उस time पे. तो 16% का nominal growth chala. So 16% took your economy from 400 to 1.89, right? So which was a growth of 16%. So economy growing at 16%, corporate India growing at 13%, price growth at 14%. Now you see the numbers are just like 1-2% plus minus, right? अब उसी phase में see some more numbers. Total profit made by all the listed companies, all not 50, all the listed companies in 2004 was 1,30,000 crores. सारा company को आप जोड़ दो profit after tax. This ended at about 4,30,000 crores. So 1,30,000 crore ka total profit went up to 4,30,000 crores, and corporate profit to GDP was about 4.5%, right? So that's what happened in that phase. And us phase mein Sensex hit the first lifetime high of 21,000 just before. First time Indian economy became $1 trillion economy in 2007. So much happened when the economy was doing a 16% growth. ठीक है ना? तो ये सारे numbers we have understood, but basic GDP growth 16%, corporate earnings growth 13%, price growth 14%, Nifty became Sensex. 2014 to 2024. Now, at that point of time, the GDP growth slew down to 7%, right? So, largely the inflation came down. There was a currency deflator because rupee depreciated at that point of time. But we saw only a 7% growth on the economy, right? And that took our economy from 2014, 1.89 trillion to about 3.8 trillion last year, right? So, just a 7% compounding over the last 10 years. And the corporate earnings growth also slowed down because the economy slowed down. So the corporate earnings growth came to about 12%, right? And the price growth was 13%. Still Nifty became Sensex.
So despite a slowdown, we've seen Nifty become
7% का GDP था, but आपकी earnings growth भी 1-2% से slow हो गई. तो आपकी प्राइस भी 1% से स्लो हो गई. सो 2004 और 14 के बीच में क्या हुआ था कि निफ्टी डिड बेटर देन सेंसेक्स, बट between 2014 and 24, Nifty and Sensex were almost equal. उतना फर्क पड़ गया. That's the only thing. Now you do this for the future. जो मैंने आपको बताया क्या 14% अगर आप assume कर रहे हो 14% growth, then we are assuming that economy will do 10 or 11% nominal growth, which will result into 12-13% of EPS growth, and which will result into 13 or 14% of price growth. Data को expand कर दो, we'll be somewhere around these levels of Sensex. Bound to happen. Something has to be really, really messed up for this to
not happen.
Not repeat. Now, kabhi sitting out here, you are also thinking. When I talk to people, they are also like blank. मतलब कोई reaction ही नहीं आता कभी भी. But had I told you this 10 years back, ये होने वाला है ऐसा. So now you'll think a little differently. So thinking
actually compounding as a concept is very hard for people to digest. Even people who capitalize on it. 2-3 साल के आगे सोचते नहीं है ना हम. अभी क्या सारे questions आप जितना whatever investor seminars I do, all the question is एक साल बाद क्या होगा, एक साल बाद nobody knows what will happen in एक साल. और आप किसी को बोलोगे ना 8+8+8 करने के लिए तो उनको आंसर पता रहेगा. But if you tell someone to do 8 into 8 into 8, they'll suddenly just lose track.
So formula you interviewed Ramdoji recently, right? And he was giving his compounding numbers like we've learned a little bit from him. He's far way ahead. But 1,000 times at 15% can be done in 30-35 years. You can actually, but thinking that, there's this interesting terminology used in this by this author called Thomas Phelps. He talks about vision, courage, patience. Again, Ramdoji has learned from him only. The vision part, is thinking 10 years, 15 years, 20 years. When you want to create wealth, and you've interviewed a lot of successful investors and fund managers, all of them have created a lot of wealth, but they've created over 20 years, 30 years, 40 years, right? But it's been a compounding of 14-15% only. But utna saal vision hona bahut zaruri hai. So once you have vision, then you have to have courage to buy. And when you have courage, then you need to have patience to hold. And as the author says, patience is the rarest of three. Patience nahi hai.
So what do you think is the one thing that sets successful people apart from unsuccessful people?
Conviction, belief, vision, like I spoke about. I think these are things. Conviction, and I think that is very, very important. Like,
conviction in yourself or in your idea?
Conviction in everything. In conviction in your belief that, let's say you're betting on India as an asset class. Then what is your conviction about India for the next 10, 20, 30 years? Right? If you want to invest outside of India, then let's say you want to invest in China, then what is your conviction about China? How much do you understand that country? How much do you understand the growth journey of that country? What all can happen, good, bad, ugly, whatever. And then you play it out. Right? See, before any sport starts, let's say cricket, all the players will go down on the pitch and they will see that how the pitch is and all of those things, right? And then they make a strategy around this. So you need to have the belief on the numbers, on the data, on the reforms, on the growth. Then can you bet on something? Before betting on something, you need to have conviction. You need to have belief. You need to have understanding, and you have to be agile.
But sometimes it's also faith, right? Because you don't know which way things are going to go. Like, for example, you're assuming that the GDP growth will be about 5-6% and this will continue for the next 10 years. You're assuming that corporate growth will pick up. You're assuming that reforms will come through. So a lot of it is faith related also.
So faith bol lo, belief bol lo. Faith is also belief in a way. Na? I mean, see, Rakesh Jhunjhunwala, if you track him, all of us have grown up listening to him, right? Go back to his interviews 30 years back, and then 20 years back, and 10 years back, right till, he passed away. He's always been very bullish on India, and it has played out. And in between, I mean, we were not a large country. We were more messy than we are today. We had more issues than we have today. We had so many issues. In that, there was this guy who was betting on India, and it played out. From nothing, he became 50,000-60,000 crores, right? Just equities. Look at Buffett. Like, US has never been great from the time it was born. US has seen multi-time recessions in 1930s and 1970s. They have seen multiple times recession, right? The Lehman crisis at 2007-8 is also recession. But somebody like a Buffett has been invested across all time frames, and he always says, if you remember in his one of the Berkshire Hathaway AGM, I had gone there, and I think in 19, he said that don't bet against America, right? So that is his belief, that is his conviction. So 99% of his money, or maybe more than that, is actually in US. It is not in India or China or Europe. And few investments here and there he would have done outside of US, but he's bet on the single country, and he's made money after going through all ups and downs. So if you talk me personally, I have a lot of belief, a lot of faith that this country will be the next. If you have to become a next major power, then you have to participate, right? There are risks. Like I said, it's not going to be a one-way journey. There are going to be ups and downs. But do you believe? If you tell me believe in this country for next 12 months, maybe I'll be moderate, right? If you tell me to believe for 10 years, I'll be excited.
So what's been, since you've been in this industry for over 25 years, at the helm of Motilal Oswal Asset Management for like 13, 14 years
13
now.
Years, yeah.
13 years. What's been the biggest lesson that you've learned through your journey?
Tons of that. I had no understanding of equities. Before that, I was a pure salesman. I can say that I'm a knowledge-based salesman. I think knowledge is very, on the surface, equities look very easy. But beneath the surface, there are many things which play a role. To understand equities, to understand business. I used to not even understand what earnings is all about, actually before maybe 15 years back or something like that. So I think knowledge part is something which I've gained quite a bit. Lot of learnings as an investor from our chairman Ramdevji also, and he's very kind. He likes to share wisdom. So practically I've heard him so much, I can guess what he's going to speak next time. Some new insights will come, but largely I know what he's talking about. Yeah. And I think what we have learned from him is that, what I'm saying is that, do simple stuff, simple investing, stay put, invest whenever you have money, redeem when you need money.
But I have one complaint. As a Motilal Oswal investor for the last 10 years in the funds, right? There was a period when most of the funds underperformed the benchmark quite a bit, underperformed your peers as well. There was a period when the PMS also didn't do that well, despite the market doing well. I mean, you're nodding your head, so clearly you agree with that.
Yes, of course.
Why do you think that is, and how have you changed?
I was at the forefront to get all the bashing at that point of time. So see, our journey, real journey of building our asset management business started in 2013. We were all of under 1,000 crores of total assets then. And we started to build up because we had a track record, we had our philosophy in place, processes, QGLP you would be knowing. The first 5 years were great years because the way we were thinking, wherever we had conviction, we invested, we made a lot of money. So between 2013 and till 2018, our funds used to be right on the top. And that led to growth of our AUM from, let's say, 1,000 crores to we peaked out at 40,000 crores. Now, see, in an investing journey, fund managers, asset management companies also go through cycles. It's never a linear cycle. So they will have a 3-4 year of great cycle, then 2-3 years of down cycle, consolidation, then some changes will happen, and then the fund goes. Then they start to go back on the top. Any fund manager, you can pick and choose anybody and see the journey, right? Everybody goes through ups and downs. And if you remain invested through the ups and downs, you make a CAGR of 14, 15, whatever that number comes over the longer term period, right? In our case, we had a certain style, largely we were buy and hold investors, but the markets had changed. The buy and hold style was not playing out. So we started making changes in our philosophy. So from buy and hold, buy right, sit tight, we used to say we are a lot more active investors. The activity in the portfolio, which used to be like less than 10% then, today probably would be more like 40-50%.
The churn, you mean? The
churn ratio. We worked very hard on new ideas which can make money tomorrow, buying them as early as possible. Our focus on growth and understanding of growth became a lot more sharper. Like we have been discussing that growth is equal to return. So where will the growth come? Which sectors, which themes? And if you can identify that as early as possible, you get the benefit of good returns coming from those companies. So we worked a lot on the understanding the growth of sectors and businesses, and all of that actually, and we also invested in the team, right? We used to be a small 5-member, 6-member investment team. Today we are close to 30-member investment team. We have 13 fund managers. We have 9 analysts. We have a 3-member risk team. So we have invested a lot it's like investing a lot in the engine of the car, because the first thing you see in the car is the engine. So in our asset management, it is investment team. So we have invested in a lot of new talent, a lot of homegrown talent. We got leadership, sorted out. We got Pratik Agarwal from ASK, comes with 33 years of experience. Then we have, of course, Ramdevji. So people level changes, process level changes, policy level changes, portfolio level changes, everything resulted into performance changes. So fortunately, over the last 3 years, we have not only recovered, of course, we've done well over the last 3 years, but we've also recovered all the underperformance of the past. The same mid-cap fund today is a darling of the market. Our own mid-cap fund was 43rd out of 43rd 4 years back. 43rd out of 43rd.
I was an investor in that fund, I know.
But had you stayed...
Painful.
Had you stayed, but that's the patience part.
I didn't know you that time. No, I was out of state.
But you could have spoken to Ramdev. You have access to Ramdev Agarwal. You could have spoken to him. He stayed back, right? And from 2021 till... so the bad phase was 19 to 21. After that, I think the bottom NAV was 22, 23. Today it is 100. That 2-3 years of bull when it comes into a fund, it takes care of everything. Today,
but it's interesting that you guys changed your strategy, because
which is what I liked out here. Honestly, I worked in 1 or 2 more firms. I'll not name them right now, but compared to them or compared to what I see in the industry, I think we are open to change. Our promoters, and that is what gave me a lot of confidence in that patch, because we were seeing the changes happening. We were seeing people changes. We were open to buying a lot more, diversify our portfolio. Our comfort in many sectors was zero. We used to say openly that we will not do this, we will not do this. Today we are saying never say no to anything. Like buying a loss-making company was completely no. Today we have benefited by buying some companies which have bought in losses and now moved into profits. Right. So we are very open, very broad-based, very diversified, open for ideas, whichever sector, power होगा, infrastructure होगा, digital business होंगे, कोई भी हो. अगर if we understand the firm, we understand that how the P&L will move over next few quarters or next few years, we are very open to buying that as early as possible. There is where you get the PE re-rating benefit. On that point, let me also tell you that market PE multiples also keep expanding every 10 years.
Yeah.
I forgot to give you this point. 2004, our markets used to trade at 13. That was the normal. 2014, it became 16 and a half times, 17 times. Today, it is 22 times. Right? So the PE multiple also keeps changing every 10 years. It keeps getting